Yeah, nothing. You didn't miss anything you needed to hear.
Hey, all right, that's good. That's good. I like being reminded I'm a mug.
That's what I'm here for.
Will Barnes has sabotaged your Wi-Fi so that he can take the spotlight on this one.
Yeah, no, that's all right. He can have it. He's the brains behind the operation.
He hasn't realized I do it every week just to remind him. Wi-Fi down.
I'm the bottleneck at In Practice, so we're all right.
That's good. That's well, that means you're getting pushed the hardest. Bottlenecks.
Yeah. Maybe that's what we should change our name to.
I mean, go on. Yeah,
bottleneck bastards. Yeah,
bottleneck bastards. Here to. Yeah, I mean, there's something to be said for. I don't know. Yeah, no, we can. I don't know. We'll get into that if we must, but it's a fun topic too.
All right.
How you yeah, ready when you are.
Yeah, we're ready. We're all recording. We're ready to roll. So I'm just like to jump into this with you guys. I think you have one of the most interesting kind of sets of backgrounds and business and perspective of all the people I've met. We met through a really, I don't know, high signal channel, I guess, in my life, which is like Blaz and Lattice Work and the whole kind of like Charlie Munger Mafia / fanboy club. So I have learned a ton from you guys already and love your business. And I'm really excited to kind of dig more into all of it. I want to start with what is becoming my favorite opening question for each of the Wills that we have here, Will Barnes and Will Oliver, which is, who are your heroes?
Wow, big question.
Ooh.
We should proceed alphabetically. So Will Barnes, but who are your heroes?
It's a weird one because I think in a way my old man, well, my father probably is one in a way, mm-hmm. right? But then I also found, Munger, Buffett, that whole way of living and I guess building a business and living a life because of my old man. Not because my old man doesn't really know Munger. He probably wouldn't even know who Munger is, right? If I asked him. I mean, probably now he would through me, but previously he wouldn't. And he kind of lived his life in a way that, was nowhere near what kind of Buffett and Munger were kind of preaching in a way. So it's in a weird way, I had two heroes in different ways. One that would teach you character, morals and maybe the life, and then also how I wanted to live my life through learning and finding Munger and Buffett and then beyond that all these other great leaders and people. So that's the kind of paradox of an answer.
I mean, I remember picking up like Poor Charlie's Almanac off my dad's bookshelf, but I think even if it hadn't been that explicit, I think what you're saying, like I was still like attuned to the values of Munger from my upbringing, and so like felt like a very natural fit to like kind of carry the intellectual and moral baton forward.
Well, it's weird because my old man, he's been bankrupt a couple of times. He's never really had a proper corporate job. Never really doesn't invest, and looking back now, I think, Will, you and I have spoken about this a few times, right? Like I probably emotionally scarred or somewhere along the line in terms of the bankruptcies and just the pressure of, and just me thinking maybe probably unconsciously, like why is this happening? Like what can you do to stop that? And then eventually found I guess different ways to live your life or think about business and spend your time, and then obviously your money, and so that stuff like that couldn't happen, right? And so that's a weird way that it come from having a hero is in your dad, and then actually that lead into something else, which obviously I've never met Charlie Munger or Buffett yet. I've probably learned more from them, or just as much from them than I have from my old man.
Yeah. That's awesome. Okay. Interesting. I have a pattern of friends whose families went bankrupt when they were kids, and it really inspired them to understand finance and, swing that pendulum the other way, the next generation. Will O. Who comes to mind for you?
So there's some, as you might expect, there's some parallels in our story, but also some really interesting differences. I think there's, my father didn't go bankrupt and experienced a degree of corporate success, but I think one of my main lessons from him was the lesson of corporate success potentially being hollow if one hasn't aligned oneself with authenticity. So although, and I mean, Will and I actually originally, I think the first phone call we had, we literally spoke about Munger, right? I was working at this Third Bridge business, one of the major expert networks. And you know, he was asking me, well, how do you spend your day? What does this work involve? And within minutes, we were talking about some of Munger's ideas and putting those into practice in studying business. And so it's kind of this like a mirroring, I feel, in our stories where our fathers actually like haven't met, but would get along extremely well, speak the same language. I have a sense that Will's father has, you know, it's very interesting to explore how that also brought us together.
What was that background like? Where did you guys come from, and how did you come to meet each other?
So on a phone call, we were hiring at Third Bridge, and
it's a funny story, actually, right?
I was introduced to this guy by the division head, right? It's like, hey, I don't like the phone call. I say, I don't get this guy, right? He's like, doesn't fit into any box. But I think you'll like him. And that was part of like this guy who, you know, he actually was the first one to start this, or was the first employee of the business unit. We ended up growing into, I don't know, 35 million unit at Third Bridge within 6-7 years. And his genius was to kind of spot people, although in ways he couldn't articulate it. He had an intuition. And so passed the phone to me. He's like, hey, I don't get this guy. Have a word with him. And I think when I told Will that the work that we were doing and the way we'd set up the process involved interviewing executives and reading for 4 or 5 hours a day, he's just like, fuck off. I don't buy it. Like, this is just not.
It's too good to be true.
Exactly.
I mean, I think I've shared this elsewhere, but I didn't sign my employment contract for the first month, because I also couldn't imagine that what they described to me in this work was actually possible.
So you guys met as a result of, which one of you was like interviewing the other? Is that how it worked?
Yeah. So I was actually, he was interviewing.
Yeah, I was hiring. We were hiring for analysts.
Yeah. Oh, well, and the funny story is that I had a job. I was already working I was actually working at a hedge fund at the time, like a decent hedge fund in London, and didn't actually tell Third Bridge and Will and the guys there that I took another job, and which is also really weird, because I took a job and everyone was really congratulating me and saying, well, you got into this great fund, great job, you know, but I didn't reject Third Bridge. I didn't tell them, and it's obviously something in my unconscious that went like, actually, this is what you should probably be doing.
Interesting. So will you tell us, what is Third Bridge? What were you guys doing there?
It's Third Bridge is, they would call it an expert network, started by two former Bain guys. Long story short is that two consultants pretty much built a GLG version in Europe, which is how Third Bridge kind of started. And the business is very simple, right? It's connecting mainly investment companies, but frankly, anyone, corporates or consultancies that want to speak to operators, right? Or people in industry experts. And so the original business in the industry is private one-to-one phone calls. So roughly customer would pay $1,000, get access to speak to an industry executive for an hour. But they were private. And then what Furbridge was doing, and this is what Will and I eventually, met and started to build, was the content side of the business, which is very simply, we were conducting the interviews internally and then recording them, transcribing them, and selling subscriptions to hedge funds and private equity funds globally to read and learn about businesses.
Yeah, so that was the business unit at Third Bridge, where you guys met and started to work on, and you're just living this dream of like, oh my God, I get to interview interesting people and read all day, and like people pay me to do it. Like, this is awesome. What was the story of the transition between like, we're living the dream but working for somebody else, versus like, oh my God, we've got to go fight the fight and do this thing ourselves? Because you founded In Practice. But I guess I don't know how long you were doing that before you spun out. What was the motivation to spin out? Kind of that concept.
I was there for a total of 5 years. Will
Okay.
for 3. He joined me 2 years into that experience of building this unit for Third Bridge. And really quickly, just for a tiny bit of context on the industry. So it's around a $2 billion industry. The majority of that, the volume of work that takes place consists of one-to-one interviews. And that is a mix of everything from your McKinseys and Bains on the consulting side, to private equity funds, to credit funds, distressed funds, debt investors, and then the whole equity investing world, public market equity investing. The industry is dominated by, as Will mentioned, GLG, and probably the top 5-6 players have 2/3 of the market. So wow. It's reasonably, it's not super concentrated, but there's a few dominant players, and there are meaningful advantages to scale. And so that is
there's a little bit of a network effect there, right? Because they have all the executives signed up, they have the kind of contracts on the customer side. Yeah, so that makes sense.
Well, I guess we'll find out, right?
And this is interesting, right? This is part of the context for how what led us to be maybe insane enough to start something in an industry that's reasonably mature, right? It's been around. These services have been around since the 90s. The established players, they're reasonably sticky relationships that these businesses have with their customers. There's a really meaningful compliance component in the way customers look at these services. There's a good degree of risk aversion with new providers. And so to have a shot, that we can speak a little about what right we have, or we feel we have, to exist. The story has yet to be written for the most part.
Right? The story is being written every day. The blows are still falling. It's a beautiful, it's an exciting time to be talking about it.
Yeah, by all means. I think one thing we asked ourselves very early on, the work is just so much fun. So one of the first questions was like, how can we create a system to do this forever? Right? Like, is there a way? That was the sort of instinctual, unconscious, like I have no control over that drive kind of thing, which is just like this. If we could do this for a really long time, that would be a lot of fun. And then there was, I think, thinking about the industry structures, participating in the industry, thinking about what room was left for basically different forms of niche providers, and then embarking on that whole adventure of like, how do you match the market opportunity for what we came to feel was a lower price, high quality offering for a subset within our customer universe at Third Bridge, in the public equity investing space, and what is authentic to ourselves, something that we're still going through right now, right? Which is what's really us. And, there's the theoretical market opportunity, and then there's like, what are we here to do? There's plenty of things that we could do that we're not made for. And that's ego gets in the way, all sorts of, yeah, so I think it's something that we deal with, like we're dealing with right now, actually a lot, is what's really deeply authentic to who we are, and how can we make that contribution, in a way that where authenticity is aligned with a hopefully correctly diagnosed market opportunity, right?
Yeah. So tell me that, maybe in a little more detail, the opportunity that you saw. I know kind of one of the things that's endemic to the industry, though mature though it is like a huge take rate. There's also kind of a homogenous approach. Like, there's a real brand difference between, GLG or kind of those other handful of leaders, as far as I can tell. I'm an outsider to the industry, but and then you mentioned kind of niches within the demand side. So was there something specific that you were like, oh, that's our into the industry, like that's where we're going to kind of put the tip of the spear?
I think one thing that is worth just discussing is that the industry is very different based on the customer, right? So a private equity fund, a consultancy, and a hedge fund are obviously very different entities. They use the services in different ways. Specifically, the hedge fund or the public equity side. So private equity and consultancies kind of work together, but on the hedge fund side, it's a very different ball game. And we were obviously producing the content at Furbridge. So we were conducting the interviews. Yep. We were also going out and selling the subscriptions with the sales team, right? So we were actually going on the ground, meeting funds, pitching the products, understanding what they wanted, understanding why they wouldn't sign subscriptions. And so we had this hypothesis that, we have kind of knew, because we were seeing the feedback, that a lot of these services were getting quite expensive, especially for relatively smaller hedge fund managers. So startup funds, 1 or 2 man shops, but also even up to like 10 man shops, right? It's paying 50K, whatever is 100K is expensive, right? So we knew there was a long tail of a market out there of people that would be willing to pay for high quality content, and we could produce the content, right? So we knew that we knew how to run the business, we knew how to produce the content, and we kind of had an understanding of what the customer, and also frankly, like, we just love doing this work, right? We want to understand how the world works, and this is the perfect opportunity to do that through business and studying great businesses. So what we realized was that actually we love doing this work, and we want to build a system that can sustain this work for decades to come. But we also knew that a much more affordable solution would be attractive to many. And then we just wanted to decide on kind of what we wanted to explore, right? And so really, this is where we came to In Practise, which was a much more affordable solution, plus studying what we believe are high quality, typically owner operated businesses that we believe are just fantastic, So that's kind of what we do.
The ability to kind of direct your own attention to, because you don't have to like guess what the hedge funds are doing or just research what's assigned. Like you guys assume, right, get to kind of pick what rabbit holes you want to go down now.
Exactly. And we also Furbridge, the foreign business at Furbridge was particularly interesting because it was the first time that an expert network was their own client, if you understand what I mean. So, for example, we were conducting the interviews internally, whereas historically you'd wait for Bain or a hedge fund to come and say, I want to speak to someone at Google. Actually, we were internally being the client, right? So we were taking a stance of what we thought was interesting. So we were pretty confident that we could, pick up particularly interesting companies, or also just understand how to analyze them. And we spent years refining the approach of, just hot, I guess, business analysis, reading through filings, doing all that kind of grunt work, right? And then also finding the executives, connecting with people, and understanding how to interview them, which we can get onto later on. So we kind of had all the ingredients, but obviously you just never know if people want to pay for it, right?
Yeah, absolutely. And it turns out they do.
Well, so far so good, right? We're still here, so we must be doing something right.
And you're coming in
Right.
on the kind of the low end of the market too, right? I mean, I heard you mention affordability in there, and kind of the price strain that some of this puts on.
And the interesting point is that, as with all of these things, is that, you have a hypothesis, you find an effective or efficient way to test it. We thought we had a somewhat efficient way, even at Furbridge, from the data that we had and the feedback that we were getting. And also, Furbridge just wouldn't serve those clients, right? It just wasn't worth their time to set a 10K subscription, right? So we knew there was a market out there. But then, as with all these things, right, the market evolves. Tegas and Mosaic, had a better mousetrap than Furbridge. And so, you've got to adapt, and you've got to be, you've got to pay attention to what customers want, how their expectation of services evolve. And so, our original hypothesis may have been tested, but we've also evolved in what we think is a solution that we want. And frankly, a lot of it comes from what we would just want ourselves, right? As customers,
Yeah. I mean, that's one of my favorite things about this. Like I have such a, I get really excited when I find businesses that are solving like multiple problems at once, and that are just like, I think to, Will Oliver's point, like the authenticity, like when the founder's interest and the customer's interest and like a quality business all kind of overlap in the same thing. I feel like, you two were both kind of already driven by this question and curiosity and appreciation for the work, and then found a way to build a business around and on top of it that aligned with, your values and your interests and the way you wanted to spend your time. And I think that there's one question that like summarizes this to me that we have talked about before, and that I think is in a lot of these docs, that I think is like In Practice is maybe best explored as a potential, as a vehicle for answering this question, which is, what are the 100 highest quality public businesses in the world today? Like, that is a question everyone should want to know the answer to, and millions of people do. And the answer is maybe less interesting than all of the different ways to specifically go about it. And I think you guys have like arranged your lives in your business to solve this problem in a way that's super interesting. And every word carries weight in that sense, right? Like, I know you guys have thought so much about quality and so much about quality in business. And I want to just kind of like pull your string on that and have you like show us that world in the context of that question.
But it's not even the answer that also is that only matters, right? It's also how you get there. It's like, how do you build a system that can make me understand what quality means in business? And then more importantly, for our customers, i.e. investors, like, how do you build conviction to allocate capital to those companies, right? So what we think about is that process of, if you think of step one, how do I source companies or stuff to research? How do I build an understanding? And then towards the end of the process, it's how do I really build conviction? And back to how In Practice and these things evolve, is that just executive interviews is not the solution, right? You don't just do interviews from executives and then find out everything you need. A lot of it comes from conversations with other investors, whether that's on private or on the phone or with your friends. Like, so we're always thinking of new ways to help people learn in this format, because it's more about actually us building the system for people to find those,
especially since that answer is going to change all the time, right? You've got to be able to refine that answer constantly.
Well, and you can't buy conviction from someone else, right? If I give you 100 companies, like, so what, right? You can't buy the conviction you have in that. And so this is also what we think, part of another hypothesis that we have is that, especially in the industry now, no one focuses on helping investors really build conviction. Like, arguably, the expert networks could argue that. I mean, a lot of sell side could argue that as well. But, frankly, like, that's more on the kind of, we call it the pre-conviction stage, just more like just analysis, right? Helping them understand, like, really building conviction takes time, but it can come from mainly conversation and debate and dialogue with others, mainly friends and other investors, is what our hypothesis is.
Yeah, maybe you can rent conviction, but you can't buy it. Or what's the Bezos quote? Like, you can I can explain it to you, but I can't understand it to you. And there's like
big difference.
Yeah.
And this is also conviction is the foundation to really compound capital.
Mm-hmm.
Right? And actually you can analyze as much as you want, right? If you don't have a conviction and find a way to help your customers build conviction, or just find conviction yourself, then it's going to be difficult to really hold on in those tough times of Amazon having a 90% drawdown in the early 2000s or whatever, right?
Yeah, and being willing to hold it for 20 more years.
Exactly.
Yeah, there's a fund, I can't remember the name off the top of my head. I think I have it in my notes actually, of that managed to hold Amazon, and it's like somewhat of a legendary investment in these circles, like because they actually it is the perfect example of like simple idea executed incredibly well. Is that Nick Sleep and Zach Zakaria?
Yeah. Nick Sleep. I think Bill Miller's held it for ages as well. Right?
Will Barker, I think, was in there too for a long time.
But that is, and this only comes from conviction, right?
Yeah.
Which is almost the hardest. Like, it's the hardest service to sell, right, to someone, right? But what we're interested in, mainly for ourselves, because we're curious about it, is like, how do you build a system? We think we have one ingredient, right, which is executive interviews today. We do stuff on the outside, right? We do some weekly write-ups. We do some other dialogues that we're ramping up. But this kind of all falls into the somewhat analysis stage, right? And so, we're thinking a lot. How do we help investors really build conviction in some of the companies that we're studying?
So how do we want to unpack the concept of the highest quality public businesses? I know this is something Will has thought a lot about, and I have received many earfuls about the concept of quality. And I think I want to dig into the concept and the systems that you guys have.
Well, the first thing is it's a really hard topic to get your hands on, right? It's like talking about, try defining truth, try defining value, right? It's a rabbit hole type topic.
It's a process, yeah,
that you can approach from and I don't know if you've come across Ian McGilchrist's work, only
through you,
a British academic that talks about ways of seeing the world and the left versus right hemisphere ways of seeing things. And that's one framing. You could look at it. They both hemispheres, or each hemisphere offers a slightly different take on reality. The left hemisphere is more practical, analytical, rational. You could look at it in terms of psychodynamically as the seat of your ego. The right hemisphere is open awareness. It's the awareness that a bird uses to scan the environment for predators, right? The left hemisphere is looking for food, right? Trying to distinguish an object from its background. So that analogy I think is quite helpful, right? There's that open awareness from the right hemisphere. So to bring that into quality, there is, on the right hemisphere side, you get into Pirsig, right? And the Tao, and are almost a religious tradition in answering the question, right? It's this sense of an intuition, right? You know quality when you see it, right? You have these quips, right? But when you see it, part of the joke is that you can't articulate what it is. I just feel it, right? There's something about a resonance, right? Quality, you sense it. It relates to authenticity in interesting ways. And then I think one way I've come to see it from that maybe more right hemisphere perspective is quality. If you imagine a multi-party stakeholder model, right, where you could look at it in a business context, where you have customers, employees, shareholders, maybe the local community, maybe society at large, the ecology. And then if you want to go really far into multi-stakeholder, future generations, right? And I think I've come to see quality in business as win-win dynamics in those stakeholder relationships. We can get into why win-win matters and how that relates to quality. But I've to get to the point quickly, and maybe we can unpack it, it's a business embedded in win-win dynamics at multiple levels of that stakeholder hierarchy. And the higher the quality, the more win-win dynamics you see the business embedded in.
Interesting.
And
then the less sort of interfaces, the less places that the business conflicts with the environment, the longer the entity can be assumed to be around, and that is the source of all of the returns, the long-term nature of it.
Right. So that's the sort of 20,000 foot view.
Interesting. Yeah.
Around resonance, around him. I think about quality. I think about biology. I think about natural systems. I think about, redwood groves, right? I think about something that stood the test of time, that is so deeply resonant with its environment.
Yeah. Alligators, cockroaches, redwood trees.
Right. What can we learn about them and the way they're so, and then there's that whole right hemisphere lens on things invites, more abstract questioning around authenticity, around the edges of what can really be described about quality. Left hemisphere wants to put things in a checklist, right? And wants a sort of more scientific, rational, sort of local definition, which is super practical. And I think it's not that one. I think what we're trying to do in our business is a synthesis of both perspectives, right? It's how do we take some sort of more metaphysical description of quality and bring that into, really practical approaches to understanding and exploring quality in its extremely practical manifestations in competitive environments, in business.
Yeah, I think the people who it is an interesting theme of that some of the people who are divergently successful all sort of seem to have their roots in studying nature. And somebody that you introduced me to that fits this is Dee Hock, who I'm like obsessed with now that you have introduced me, the founder and CEO of Visa. And you go read his book and it is not what you are expecting it to be. It's very it's really an almost natural philosophy. I would love to hear kind of what you guys have learned from him and what you've applied to In Practice that came from him, or even in the case of Visa, what is it about his insights that made Visa the incredible company that it is?
And that the business is insane. I mean, to zoom right into an extremely practical, we may get into Visa, but I think one thing that I'd be very excited to share is around Hock's concept of educing. And actually, I suppose, it's actually, you can't really talk about that without alluding to the way Visa was structured. But for us, practically, we think about this in interviews and in conducting conversations. And it's really foundational for us, this idea of, in interviews, removing barriers to the free flow of information. Effectively, what Dee Hock did with Visa in structuring that business in a trustless environment, right? A business whose fundamental right to exist is trust, right? In the 1960s banking system in the US, was he had an insight through his study of natural systems as to how humans function, their innate creativity, innate possibility, innate gifts. So there's really something that I think it's a very constructive worldview, a view that harnesses human instincts for cooperation as much as competition. And what Dee talks about in building Visa was he talks about effectively removing obstacles to innate problem-solving capabilities that we have in order to create. And then you've got his hierarchy of the purpose for the organization, but it's this philosophically, the underpinnings of Visa are this idea that you remove obstacles to a very natural inclination that human beings have to contribute towards, hopefully, and the more clearly articulated the purpose is, the more chances of success you've got. And for us, really practically, that idea is carried all the way through into interviewing and is at the foundation of our process in an industry that frankly looks at the interview process as an extractive process, right? You even have, it's very common, and it's not to judge, but people say, talk about picking brains. People talk about, people talk about extracting information in finance, and while that may
digging
be
in,
digging in, right, and that's all fine, but what's implicit in that view is a subject-object relationship, an almost adversarial relationship that people can very easily fall into, where it's like, I've got you, I'm paying, and especially in our business, I'm paying for your time as an executive, and I'm going to take all I can get.
Yeah.
As opposed to, we're here together, let's go somewhere together. Let me understand what you would like from this interaction, how you can experience some form of value as far, participate in the value that's being created. How can I really put, and how can we go somewhere together? And that can really transform, obviously the way you can relate to people, what you can talk about, where you can go, how their willingness to volunteer information. And I think it's over the years as we've, by the way, I don't think we came into this work, I think maybe with an implicit or some sort of maybe appreciation for this, but we had to cultivate that, because through trial and error, really through making mistakes and through being extractive, being aggressive in our line of questioning, of not investing enough time trying to understand what a win is for the person we're interviewing, not enough time trying to understand who they are, because everyone's under pressure to, So
interesting.
But a lot about Hawk is incredible. I mean, there's so many things.
Is the left and right hemisphere a reasonable metaphor for like you two in the division of labor and in practice? Like Will Barnes, are you the left hemisphere and Oliver's the right?
I think you've hit the nail on the head.
Just a hunch.
It's also just, but back to this point on quality, because I'll get to the point in a second, but it's whether you're a founder or an investor, when you talk about, like, it has to be authentic to you, right? Like, we're running this business because it's us. Like, if we were selling pet food online, we would have failed 18 months ago. It's like there's a deep rooted, authentic side of this that needs to align to actually create something that is high quality, and we focus on that a lot, and bring in both of our world views together, either whether that's right side, left side, or you name it, to bring it together and build something that is a reflection of who we both are, right, and what we believe in.
Something I found in your guys' notes that I think is interesting, because I think it's a truism, but it's one of these things that you expect to be kind of arbitrage away, is that general practices in the investment management industry are generally poorly designed for the pursuit of truth. And I'm like, I want to, from your guys' view, like, why is that? What are the blockers? Because I think part of what you did in escaping, a traditional fund was in order to be able to design your own processes. But everyone is, everyone in that investment industry is in pursuit of truth. So why does that arbitrage still exist? Like, what are people stuck doing?
Maybe they're not in pursuit of it, right? Maybe they're not.
Yeah, I guess the declaration that one is in pursuit of truth is very different than the practicality of it.
I think a lot of it is down to the institutional structure of funds themselves, right? And it's the classic career risk, and if you underperform for a couple of years, good luck keeping a lot of your clients in this business, right? And so that just unconsciously pushes people towards a mentality, a way of working, of investing that is probably very far from Buffett and Munger and those type that they worship,
So have you guys I'm just trying to understand the structure, I guess, the Indian incentive. So, and in practice, you learn a ton about and pursue you are incentivized to pursue this truth in this question of what are the highest quality public businesses in the world. But In Practice is not an investment fund, but it does the work that you do and the things that you learn enable you to better invest your own capital personally, where you do have an indefinite time horizon and can sort of freely pursue truth. But that those are synergistic, but very distinct and deliberately distinct things. Is that true? How much of like a intentional decision was that?
I think it's completely intentional, right? I think also, again, it comes from while we're doing this work. So I used to cover distressed debt at Fairbridge, right? I was covering the shittiest companies in Europe you could find, pretty much, that have over levered balance sheets and bonds trading at 30 cents, right? And so
I would add, though, what we couldn't keep Will from doing while he was in distress was the odd interview on Howden's Joinery or Burford Capital, or there'd be like, we'd review the monthly output as a team, and it'd be like, sort of, hold on, wait, what is this here?
And he just snuck into something.
And he just sneaks in, right, as like a compliment to the distress coverage. Some quality mid-sized compounder.
Yeah.
Some distress guy studying like Berkshire, like But I think this is kind of why we're doing this work, not specifically because we want to invest our money now, right? And I think the way we look at this is that we need to be as close to our customer as possible. Mm-hmm. And actually, if we just behave and act, and frankly, we see ourselves as the customer anyway. Yeah. But also, we believe if we can be as close to the customer, we will build the best service in the industry for our core target customer. And if we do that, then the system will evolve and eventually we'll have the knowledge from the work that we do to go and allocate capital to those founders and operators that we've been studying for.
Yeah. So I think
there's
sorry, go ahead.
There's just briefly on that, there's something about an interest in building a system that united both of us from a very early stage, from really like the very first few days we met and started exchanging ideas. There's this sense of building a system to surface truth and high quality information, and then an attraction that both of us had that we kind of live in slightly different ways, but markets just being this amazing testing ground for ideas where you actually have a feedback loop.
Yeah.
Right. And so there's, how do we learn? There's like an element of self-discovery for both of us. Like, what are we made of? Who are we? What do we love? Why am I here? What is, how do I experience some kind of meaning in life as a participant in this, Golden Lotus safari shit show, whatever you want to call it. Right. It's like, and so there's this system that we were interested in. And then I think, and Will, maybe if you can articulate it differently, if you see it differently, but there's something about building the system and investment results as an output of inputs. Right. And Will's been investing for a number of years. I'm really a student of his for the most part. I have no original ideas. What I invest in is I look through his stack and stuff that I can understand that I, could really grasp and where I sense there's some, I'm big on my win-win dynamics. Right?
Yeah.
Right. There's like, I'll filter through his pile but really that, there's an output of the system, right. And learning. And I think that's where there is a big difference. Although we see ourselves as our own customers, there is something about the primacy of the system and the inputs that go into that system that produce outputs. And that those outputs could be, those outputs will be performance of the businesses that we put our capital in. But
so let's talk through the blueprint of the system. We've kind of talked around it a little bit, but let's start with maybe the micro or the macro of the kind of components of In Practice, and do a section on that, and then probably end up with the mechanics of the conversations themselves, because I think you guys are world-class experts in dialogue and interview and sort of learning in one-to-one conversations. So but let's start with the system as you think of it, this system for divining truth and filtering down to a filter on a filter on a filter. Like how do you run that process, and where does it start?
I think the first place that we've started, and actually, it's not necessarily the best first place to start. It's just kind of also what we've been used to, right? Like, we come from a business that was learning from operators, right? And so naturally we left and we've been doing what we know, which I guess what everyone does, right? Which is interviewing executives. So the core of our offering is a library of interviews with operators, as we've discussed. But going back to this process of what the customer wants, and how, we did a lot of work on how people learn about businesses. What are the process and the stages of how you first discover a company? How do you dive in? How do you learn? What do you need to understand? And then eventually, how do you build conviction? And so what we think about from a kind of higher level point of view of, putting aside our position in the industry, which we can talk about later on if you're interested, but just, how we think about our solution is making sure that when someone comes into In Practise and whether they're searching for a company or they know a company, they can get up to speed very quickly on, if I'm looking at Wayfair, for example, I can understand what they do, who the management are, the shareholder structure, really kind of condense the filings and all that kind of grunt work that you need to do to really and get to what really matters. So that's the first part of it. And then, beyond that, we have this kind of analysis phase, right? Which is, again, expert interviews. We do some, In Practise dialogues right now, investor dialogues, which is, a group of investors come together and discuss the company. We do weekly analysis. So all these different types of content help you analyze and understand. And then, we're going to experiment with new features going forward, user to user engagement, more of a forum-based type experience to help people learn from each other, right? Which, a big part of how we learn is from each other, from other investors, debating our ideas, right? And actually asking people to pick holes in our hypothesis about a company. So that's what we really focus on, on a micro level, and understand exactly how do people think, how do people learn about companies, what is missing for them, how can we better serve them, and that's how our solution will evolve, and then operationally it's a whole other question, right, about the kind of the shit show of actually just doing this work, right, and speaking to thousands of executives and finding great people and organizing people to find those great people. Like all of that behind the scenes is a lot of work, that we have to organize ourselves for to actually get the outputs.
Yeah, I imagine it's a tremendous amount of work. Is the information that comes from executives, like, if there's a pie chart of conviction, like how much comes from, the standard public investment docs and just kind of like reading what's available, how much comes from, maybe information that is proprietary to your conversations or whatever other sources are. It's a great question,
right? And it also depends on the person. It depends on the investor. I mean, and depends on the company, right? Like, for example, if you go and study Constellation Software, if you understand broadly how these serial acquirer type businesses work, and you can probably get pretty good conviction just from reading Mark Leonard's letters and looking at the numbers. You can, and the performance, right? You can probably get quite good conviction. Whereas other companies, like, good luck. You need to speak to many people. So it's tricky. It depends on the person, their style, and it also depends on also the experience that you have, in different sectors, but also the company itself. Right? And so we all we know is that it's not only one thing, right? That's what we know. It's not only executive interviews. It's not only just investors. Again, it's a mosaic of different pieces of information.
And to bring in just the most overused. To bring in the most overused word in or one of the most overused words in the English language today, right? Community, as part of this story. Can you guys still hear me, by the way?
Mm-hmm. Yeah, we're good.
Yeah. Sorry. I had some reverb on the mic there. To bring in this word community, right? And that is part of a way we solve problems. There's something about We've been reluctant to use it much because there's so much baggage associated with so much bullshit, frankly, around, we are a learning community. I mean, what does that even mean, right? It's, there's so much, there's a lot of big claims made by many businesses around community. And then there's, to Will's point, and maybe, echoing some of what you said, that there's many ways to learn about something. And there's something that I think resonates for both of us is around building a space, a container for the flow of information, and really building structures that will surface the highest possible common denominators, right, in people, ideas, and matters for studying, that really communities are incredibly good at. Right? You have communities of practice, high quality learning communities are incredible tools. And it's where we share a connection to Blas and to the Lattice work and everything for me, from the people I've met we met through Lattice, right? We, and have been learning from each other since. I had the number of people I have met through that community, as well as the raw material that's provided as fuel for
it comes from trust, right? It comes from trust. You trust Blas, and Blas has built trust with all of those users. And I think we think a lot about the sequencing of a business, right? Like how do you scale an organism like a business, right? And what are the different products or services you will roll out at what time? And I think what we potentially, or hope, one of our hypotheses was that if we can build trust with our users, professional investors, concentrated public equity investors, through our interviews, through high quality work, we will build trust. And then based on that trust, you then have the foundation of a community, right? And then it just depends on what the UI and the format and the level of, what how you want to engage the community. But I think, it comes from trust, and that's the grunt work, right? That's the hard thing to build over time.
Well, yeah, trust is earned, and only through really the currency of like time. I think it is very, very. Trust earned through a shortcut is really no trust at all. I think and it is not always necessarily like synchronous time. I think that's one of the really interesting things, like the leverage available to us now. It's like they just, hundreds and hundreds of, maybe thousands of hours of writing and conversation and stuff that all of us have shared, that allows like this sort of asynchronous build of trust, but it still comes from this reservoir of time that we invested in, constructing something, writing it and sharing it, and getting that out there.
Well, and it's harder to build, online, because there's just scarce attention, right? Everyone's pulled in millions of different directions, and so you have to have something that's somewhat not only high quality, but also differentiated, right? That you actually, and if you just repeat that week in, week out, hopefully, again, the hypothesis is that you aggregate a group of people that trust you, and then what we're excited about is what we can do with that community.
Yeah. So let's talk about the sort of microcosm of an individual conversation that you enter into with an executive, or somebody who knows about a company, and how you approach that. I know, Will has shared with me a bunch of docs of research and sort of everything from very philosophical to very tactical stuff about, the art of dialogue. How do you approach those conversations? What is your goal? Or is there not explicitly not a goal? Like, what do you do tactically and philosophically to approach that and sort of put that into your truth machine?
How long do we have? Yeah, I mean,
we could have done the whole podcast on literally just this question. Exactly. I realize it's an annoying, it's incompressible.
It is, but that's exactly why it's so fun, right? And like everything,
and it's an awesome question, because to bring in a left hemisphere, right hemisphere thing, you've got the left, and I see it in myself. I want to put, when I'm thinking in that way, I want a checklist, I want something repeatable. And then you have the reality of the human dynamic, which blows checklists to pieces, right? The first chance it gets. And reconciling those two, I guess that's the kind of backdrop to this work. It's how can I notice the patterns, and how can I also set myself free to go where the water's flowing once it starts flowing. And with that, I'll hand back over to Will.
But this is the paradox of doing this work, right? And it's with this work specifically, actually interviewing executives, it's fairly specific work, right? It's former executives on a specific target company, and we're looking to have a conversation to truly understand more about the company. And there's many layers of different psychological bias and pressure, baked into that. But just at a kind of higher level, the paradox is that you have to prepare, understand the business, understand what matters, i.e. what customers really care about, and understand that the executive can hit on that, but then be willing to kind of throw that all away and actually listen to the person. And this is the dynamic that is really difficult, because you can't let the executive just stand up and preach and just let them say what they kind of want. You have to juice, right? You have to allow the information to flow, but make sure that it's the right, it's the right information that really matters, And so this is the kind of paradox that you really face. It's understanding what matters, which is hard enough as it is, right? Like, just doing the work to get to grips with companies, a wide range of companies, effectively is hard enough as it is. And then also finding the executive and making sure they understand, or you're aligned on what really matters. And then actually, when you're having the conversation, it's being willing to flow and go with the executive in ways that they, actually suggest. Because a lot of the time, actually, it's just it's a hypothesis. I don't know. I think I know what matters, but actually, if they're trying to tell me something, then maybe I don't know. Maybe I'm going to listen.
So that is a very helpful kind of start. I'm going to do a few sort of rapid tactical questions. So, new company, you're interviewing a first executive for a brand new company. What is good preparation? How many hours do you put into understanding a company before you go into the first conversation with an executive?
It depends on the company. At this point, I've kind of covered something similar at some point, right? So, but normally, like 10, 15 hours on the company, right? I mean, it would involve like reading the 10K, the filings, which you can do relatively quickly, looking at the numbers, and then also skimming through, previous earnings transcripts or earnings calls, and then previous investor days and stuff like that. So that takes a good chunk of time. But then also spending a lot of time, like there's company preparation and there's actually interview preparation, right? So there's very two different things. So you want to just understand the basics of how the business works and what really matters. You have a hypothesis there, and then actually understand who the person is, right? What do they do? How do they spend their life? What are they really good at? Where's their competency lie? And hopefully, like the great interviews align perfectly, right? You have someone whose deep competence is exactly what really matters, whether that's, I don't know, operationally or sales, selling certain products or whatever it may be. But getting those two aligned is obviously core ingredients to actually start off on a good point. And then obviously there's the conversation.
Which is where sort of the improv comes in, where you're like, you come in with all these well choreographed questions, and then all of a sudden you're totally off in a different direction. And that's where all the extra work comes in, that wasn't on the paper.
Yeah. And we talk a lot about the line of questioning rather than just the questions, right? And actually, how do you craft a line of questioning that try and be unbiased, in how you frame questions, right? But also be willing to probe and dive and actually just actively listen. This is the hardest thing to do. And all these, like, no one actually listens. Like I find myself all the time not listening in interviews, and like focusing on what I'm going to say next, and looking elsewhere, and actually not truly listening to the executive. And I go back and read some of the interviews that I've done. I'm like, like, this guy might have been, he could have held up a sign about what really matters, and I still missed it, you know, like I just was not listening. And so, yeah, you can do as much preparation as you want. If you're not truly listening, you're only getting a fraction of the value.
How often do you gain the insight in the interview and have a like, oh shit moment during the conversation versus like you have to go back and listen to it again because then you're not like you're not thinking about your next step in the next move in the conversation. It's truly almost easier to purely listen to the recording. Do you go back and do you have more aha moments reviewing than you do actually in the conversation, or do the epiphanies kind of come to you in those?
I think that the insights solidify in the review, right? Like you can, the real epiphanies come, and we've spoken about this a lot actually, Will and I recently, about like how do you even get to that point? Like what even is that feeling that you have, you know? And a lot of the time actually it's when your original hypotheses are wrong.
Yeah.
It's when you say actually, you know, economy, like the scale effects really matters here. And it's like, no, that's bullshit. It doesn't matter. This is what matters. And you're like, you know, wow, okay, I can, and that's where you have to be able to like go with it and actually dive into it and actually have a 45-minute conversation on that one specific point because you were originally wrong, or actually argue why you might be right. And this, you know, so, but what we've realized is that potentially the real epiphanies come when you help the executive get to the edge of their competence, right? And actually, a lot of the time, what we realize is that when we're having conversations with executives, sometimes they won't even realize they had that view or thought or idea, you know, and actually you can take someone to a place in a conversation which they've never been before, you know, and so, and if you can kind of interweave years, decades of experience to a place where they might question certain things about a company, or you know, if this would happen, you know, you can bring someone to a place where it really creates truly differentiated insight and not just kind of reconfirming what you might have thought was important, right? And it's fun. It's really difficult.
Yeah. And as an investor, I mean, that's got to feel like, you know, you're digging and you're digging and you're digging. You just, you know, found a diamond in the dirt, right? Like if you find, you know, that your hypothesis was wrong for reading, but you're the only one who's ever had this conversation, and the executive understood something for the first time.
You've got to completely handicap that, right? This is the big challenge, because actually, like, who is that person? What worldview do they have? Like, were they sacked? Did they hate the CEO? Like, all these things, you know, have to be taken with a pinch of salt. And again, that comes back to like the conviction part, and it's just one data point.
One more maybe tactical thing. You mentioned in there constructing a line of questions, not just a collection of them, but when you were constructing a line of questions, how does that work? What are you driving for? Is that like almost a legal defense of, you know, you're trying to reconstruct a whole thing? Is this how are you pushing towards that edge of competence? Like what's the goal
exactly there? Exactly. And so typically, you know, what we've found is that only a couple of things really matter for certain companies, right? Like if you get to a certain level of understanding, like basic understanding about a company, there's only typically one or two, maybe three things that really drive the equity, really drive the returns of the business. And, you know, and there's many ways to get to what really matters and actually understand what really matters. And what we found is that a lot of people will focus on the question, i.e., you know, how can Fastenal improve their margin, their gross margin? You know, like, where do you see how margins going? Like, that's a question that gives you an answer, but doesn't give you the fundamentals and the framework to actually understand what drives the gross margin. So a lot of what we do is we would have a line of questioning that would lead towards an understanding of gross margin improvement, right? So that might be looking at the relationship with suppliers and, you know, the contracts they have and how inventory flows through the system, or how you manage, you know, store inventory and stuff like that. Like, you know, go back to the actual first principles and construct a line of questioning that could actually get you to understand the principles or the core drivers of gross margin. Then then you can kind of make your own decision if COVID hits,
That's interesting. Yeah. So not, don't ask how could it improve gross margin, but ask what are the drivers of gross margin? What are the rank order? What are they? How have they changed?
Well,
what
go
are the
back
new
to
ones?
the principles of what makes up a gross margin, right? Like they source a product from a supplier. There's a wholesale price. There's effectively a retail price they sell it at, and then they turn a certain amount of it in a branch, right? So you can, if you have a branch manager, you can, who's worked there for 20 years. I mean, he's seen a lot of gross margins, right?
Yeah.
He's seen 20 gross margins. It's like, so you can really piece that together and actually get an understanding of how Fastenals, I'm just using Fastenals as a random example, right? Like how their gross margin truly works. And then if you do see COVID or management claim they can grow margin, you can understand how that works. And so again, that's just one example of a line of question that, and it can be anything that's, I mean, a lot of people, what we used to do a lot was like the controversial stuff, especially like in the distressed debt world, right? Like, I mean, these companies that are going bust, we want to know is like, is the company going to go bust or not? Like, everyone wants to know that, right? So like, or is it going to run out of cash? And so, but there's various different ways that we learn to actually get to that answer without asking the really controversial question, because no one wants to say
yes or no. Yeah, they can't.
Exactly.
Yeah.
Right? Yeah. No one wants to really, and there's not really an answer a lot of the time, right?
Mm-hmm. Interesting. Okay, so I want to, I don't know, probably not quite end, but do maybe a third quarter here, fourth quarter, which is talking through a few specific companies. And I've heard both of you use the phrase like what really matters a few times. And I think it'd be really interesting to go through a few of some of your favorite companies that you have learned and talk through like, what is the company, what do they do, and what really matters? Like what are the insights that you had that led you to there, and what are the few levers that drive this business? I know Will Oliver and I have talked through Naked Wines before, and I think Burford is another really interesting one. But you guys, pick whatever ones you want to run with, and let's talk through some practical examples.
Which one would you prefer to talk about?
Do I only get one? I want both.
Yeah. I mean, we can talk about Naked. I feel like I talk about Naked all the time. Right? People always ask us. It's funny because Naked is, in a weird way, it seems like Naked kind of put us on the map a bit, right? Like a lot of people ask us about Naked. I think the interview we done with the CEO, it was one of the top. It was the top interview we done last year, and in terms of people reading it. So, I mean, with Naked, it's interesting because I come across this business 5 years ago. When I guess most people probably wasn't following it when it was part of Majestic Wine. So, they, Rowan, the original founder, effectively had this idea that the value of the liquid in a wine bottle was just far below the actual the consumer price, right? So like really the consumers were getting ripped off. And then actually there was a more effective way to build a business or a solution that would be win-win for consumers, winemakers, and effectively the business, right? And what I found originally interesting about Naked was that, and actually now the company is communicating it much more effectively than they used to when they first spun out of Majestic, was that there's a behavioral or call it emotional side of Naked, and there's like a rational side, right? So the rational side is like actually in a Naked bottle of wine, you're paying to call it $10 and you're getting $7 of liquid value wine, so you get much higher value because you're reducing the kind of distribution and marketing, right? That's the rational side. Like, so a logical person would say, okay, that's great value. But then there's also like the emotional side, which we believe kind of is the foundation of the company, right? It stitches together the architecture of the business, which is the fact that the consumers, the angels, are funding the winemaker, and there's a direct human relationship in helping winemakers, do their craft.
Yeah, it feels better to pay a farmer and a winemaker and a vineyard owner with a name than a distributor. You know, and nobody's ever been psyched to pay a 30% margin to a distributor.
Yeah, exactly. And so again, and with Naked, I mean, this is still it's a small business, right? It's still learning, how to scale in the US is the big question. And again, there's various different levels of what matters for Naked right now, right? I mean, also different people will probably have different views, but part of what we believe matters is kind of like 2 or 3 things. So the first thing obviously is like, can they crack the US, right? And so so another layer of that, like, okay, well, how my big question is, how can they communicate their proposition to the US consumer? Because the US consumer is very different to the UK consumer. Because the market structure is completely different, right? It's consolidated at different ends. The big 4 grocers here practically own the market and just squeeze all winemakers, so you get kind of half cheap wine, but just from sort of a few different winemakers. In the US, it's consolidated on the wine on the winery side, right? With Constellation over those other brands, and so the consumers pay for the roof in the US, right? And so actually, how do you communicate what Naked would say is great value and low priced wine? You guys won't touch it,
Yeah.
So how do you communicate that to a US consumer who is already hesitant of paying $15 on a bottle of wine? And also, what channels do you use in the US? Because they use vouchering in the UK. So there's a whole communication / sales and marketing piece in the US, like cracking that market and obviously understanding the difference in the structure of the market, which is a big piece that we've focused on. But then beyond that is that, one of the big questions I had originally when I looked at Naked Wine was that actually the lifetime value CAC ratio is not actually high. It's not particularly high at all, right? Especially if you're used to like SaaS type metrics and stuff like that, right? I mean, you're looking at 2.5 times, over 5 years, maybe 3 times, depending on the different.
Yeah, they say 3 is really the if you got less than 3, you may not have a business.
Right, exactly, right. And so this is what's particularly interesting about Naked, and because someone could look at that and be like, actually, they're just not that exciting, those economics, right? And it's funny because the more comments I look at, actually, the lower margin businesses I kind of get interested in more these days, right? Like, I think it's more, again, it's these win-win dynamics where you're actually
they're more aligned, less risk to disruption.
You're adding more value, right? And so the way we look at that is like the economics are not, earning 7-8 times, of CAC over years, but actually you're adding so much value. And again, the retention has to be there. It's pretty decent, in the cohorts that they have, but also could be also is unknown of for the future. But it's really understanding for us is, okay, the lifetime value is not that exciting, in terms of relative to other companies in different industries, but actually, what is the long-term retention given that kind of rational behavioral business model? Plus also, what is the leverage, the operational leverage in the business that can improve that? And I think that's one thing that is not communicated by management enough and is not understood by a lot of investors. And also, we don't completely understand it ourselves yet, is because you haven't seen it. But like, what is the leverage of this business if you're selling 10 times the volume through the business? Like if you're a winemaker and you're producing 500,000 bottles, like what leverage do you get if you're producing 1.5 million?
Yep. Yeah.
Because that could change the economics, and you have a better business, stickier winemakers, and you get this.
Do the winemaker scale? Do we need to add a ton more? Interesting. Okay. And what about Burford? What are the big levers of Burford? And you probably should start with an overview of that one, because that one is a little more esoteric than direct to consumer wine.
This one's it's pretty spicy. I mean, if you the history of Burford's pretty interesting. Really, I mean, where do you start? You be hesitant about any financial services business growing very quickly is also like a red flag to most people, right? And because you probably shouldn't grow those types of businesses quickly. But historically, so they're effectively defining a new asset class, which is litigation finance, right? In short, that means that if a corporate has a legal case on their balance sheet, Burford is I call it a third party provider of capital to unlock the value of that case. So historically, a corporate would work with a law firm. They would bring the case to court, and there'll be a resolution and a payout to either party. Burford now comes and takes part of that risk away from the corporate, and is involved in effectively financing legal cases. So really, they're an investment business. They take investment risk on their balance sheet, and they also run a couple of funds. And the underlying asset is effectively legal risk, and
it's kind of like factoring receivables, right? Like it's not an insurance product. It is this thing already exists, and we're kind of assuming the risk of it for you.
Well, this is where it gets interesting, because a lot of the time the corporate knows they have an asset. Now Burford's moving in to actually helping them, release value from their balance sheet, because they have all these potential cases, and actually they're just sitting on the balance sheet. So the industry, again, this is an asset class that's evolving, but really the bare bones of it is just, it's just kind of.
So a company can initiate a lawsuit, and then because there's some expected value, should they win that lawsuit, they can go get cash at some discount for that expected value from Burford. Is that
exactly? And they do that because they don't want the binary risk, right? So they would also offload part of the risk, right?
Also feels a little feels like a tempting fate. There's a little bit of a honeypot there that we might not want to. Societal externalities are not zero there.
Yeah, well, I mean, I think part of the value that they provide is basically accelerating the value that's being released from the balance sheet, right, on both sides. And so, I mean, if you look at the kind of legal market, right, I think it's like $800 billion, dollars a year that's been released in claims and settled value, right? Burford kind of manages 4 or 5 billion at the moment. I mean, it's actually less than that in terms of the actual dollars they have out, 1.2 billion. I think they manage for 4 billion. But yeah, in terms of the core business, there's a difference between law, they call it the legal fee business, and the corporate balance sheet business, right? So they're effectively they're funding the law fees for corporates and take part of the risk. Because if you're a corporate and you have a claim against you, you don't want to go and pay the fees. It's not your business. So you go to Burford. Actually, you pay the legal fees. You take part of the risk. It's a win-win. If you lose, Burford takes the hit. But you as a business, you release capital. It's kind of like similar to what you said. It's like releasing capital from the corporate so they can actually focus on their core business, and and actually then you have a settled case, right?
Interesting. And Burford's could be on both sides.
Yeah, they mainly do claimant stuff now.
Interesting.
But they're thinking about doing defendant work. Yeah. But so,
what really matters in the Burford case?
Well, I mean, this is completely different, right? This is kind of I mean, it's like, is this business a fraud? Because it's priced like it's going bankrupt, right? I mean, if you look at the recent investor day, the management effectively came out and said that it's priced at liquidation value. So, and that was because of the Big Short report previously, and Marty Waters, a Big Short, came question the accounting and stuff like that. And I think this business gets back to actually what it does to most things. And do you believe in the management? Do you believe in the people running the business? Do you believe they are aligned, they have high integrity? Do you believe in the economics, which is kind of like every business, right? You never truly know what's going on from the outside looking in, and it's so on the spectrum. And this situation, Burford management arguably has still stuff to prove to the market, given where it's trading. And you won't know until, well, they have a big case coming up in May, right? The big YPF case. You'll see then potentially if investors will pay attention. But
did you have a stance on the, like, you know, your personal feelings on, do you trust management? Do you believe in the integrity, the alignment?
I think it's hard to argue that the two guys running Burford don't have high integrity. Now there is, it depends. There is arguments that they really don't. I mean, if you go and look at the way that they monetized one of their big cases in YPF, if you look at the wages that they potentially paid themselves prior to listing in the US, where you don't have to, in the UK, if you list on the AIM, you don't have to declare how much you earn. But again, you can, it's all perspective interpretation, right?
Yeah.
Of those things. Like if the guy's paid himself a couple million, you know, is that unreasonable for the returns they have? It's just your own personal opinion. Obviously, you want everyone to be completely aligned, but yeah, I think given how it evolved from the Muddy Waters stuff, given how the business, you know, has been built and the way they communicate and arguably the reputation they have in the market is, from my point of view, it's hard to argue that they haven't got integrity. We will find out. Yeah.
Interesting. Well, it'll be fun to see it play out. Okay. So I'm going to ask you guys an impossible question, and I want an answer from both of you, even though you're both going to hate it. How many companies can you list that you believe are on the 100 highest quality public businesses in the world today? They're both just like flinching and holding their heads and like angry at me. The answer, a reasonable answer, can be 0. If you say 100, I'll think you're lying. But I think it's like, you know.
So you're asking me how many of the 100 best companies do I know? Or
how many do you feel like you could, like, what? Yeah, how many do you feel?
But
like
my version of 100 could be different to yours, right?
Absolutely. Like there's everybody's going to have a different answer, but I think, you know,
I mean, some of the best businesses will come, obviously, and again, it moves every day, right? It evolves every day, every year. But you know, we're talking like Berkshire, Constellation Software, TransDigm, Microsoft, Google. You know, these are some of the best businesses. Arguably, you know, Amazon is probably one of the best businesses I've ever looked at. You know, arguably, and these are some of the best businesses that the world has ever seen. Right? Arguably, I mean,
yeah.
You know, Microsoft is probably it's probably one of the only businesses in the Microsoft Office kind of franchise is probably the highest value piece of software any business has ever existed, right? And obviously, you know, I think that is probably the best business I've ever seen. And then you know, beyond that, there's many different emerging businesses that we look at that are truly high quality, and that's excluding all the private ones, right? Which you
sure, yeah,
discussed.
Which is a really interesting aspect of this conversation. There's the public realm that we can all participate in, and then there's the element of quality in the private sphere. And in my experience, I see a lot of really underrated, really long-term thinking and extremely coherent behavior, coherent at the level, at that later stage of multi-party stakeholder that we were just talking about, right?
Yeah.
It's businesses that are aligned and resonant with, you know, businesses like IKEA taking your furniture back, right? The announcement they made the other week, right? There's
Audi, Lidl. There's a bunch of businesses like that.
These big retailers that, by the way, have low margins, right?
Well, and there's loads of German Mittelstand businesses
low
that are
operating
like
margins,
high quality, right? Like there's loads of these family-run European businesses that just have a craft. You know, Hermes, LVMH type businesses that just serve a very small niche that are exceedingly high quality.
Absolutely.
But then if you compare that to Amazon and like Google, like these are just completely different beasts, obviously.
Mm-hmm.
Such a scalability and.
I like. I mean, the separation of quality is interesting. Like, you know, we can talk about quality without talking about whether it's a good investment or not. And you know, Munger would say there's maybe no difference. Like, filtering for quality is a probably a more interesting question, I think, for sure. Yeah.
Well, it takes you to interesting places, and especially it takes you to interesting places when you really go, I think, as deep as you can on quality. I'm not sure there's that many businesses I could put on that list. I couldn't find anywhere near 100 businesses that are coherent on the level of shareholders, employees, customers, local community, and future generations, right? That are actually embedded in a categorical win-win dynamic with future generations. And there you get into, I think it's work in progress for us, right? It's these are the kind of things that we're looking to dialogue on with some of the world's leading investors, some of the world's leading operators. This is what's so much fun, is to bring people to the table and actually really explore what it means to be resonant with your stakeholders. Because I think it's associated, the higher quality, time is a friend of quality. And I think there are really interesting ways in which, and it's a whole nother, as you were saying, right? The relationship.
Time is almost quality, like the proof of quality.
Well, it is. And this quality is a relationship between quality and something that is sustainable, right? Something that, you know, if there's a win-lose dynamic, one party isn't coming back unless it's coerced to do so. So, you know, that leads you down a rabbit hole of market power and how sustainable that might be. And in one economic regime, that might be sustainable, but over a series of economic regimes, you know, in the US, the history of the US is the evolution of US capitalism. You've gone from an era of extremely high industrial and political concentration of industrial and political power to the dissolution of that under the New Deal, the explosion of an antitrust regime in full force until the 60s, 70s, AT&T, Standard Oil being broken up, and increasingly a reconsolidation of industries. So it's, I mean, it's the, you know, what really lasts is a part of the story. And that takes you into really interesting places in the debate.
Yeah. And I think the purest form of expression in this question is, you know, what can you build? And so I think as a final question, I want to hear where you want to see In Practice in 40 years and how, you know, you guys will live this sort of appreciation of quality and alignment and interest and pursuit of truth.
I hope it's alive. Step one, survive.
Yes.
Yeah. And then
yeah,
it goes back to this thing. Like, this is why we focus a lot on what is authentic to ourselves, right? Because something that has to last that long, it has to be truly authentic to who we are, what we believe in, how we want to live our lives. And like, you know, we're not necessarily, we ain't doing this to spin up something and sell it in 3 years, you know. And we haven't capitalized the business to do that. We haven't, wrongly or rightly, it's just the decision that we've made, and we're not in that we're not in this for that reason. And so, you know, we focus a lot on how do we want to live our life? What do we think the world needs? What do we think our customer needs? And what is truly a reflection of who we are? And it will be that, you know, and who knows? Yep. Well, it might be selling pet food online. Who knows, man? You never know. In Practice might be like the next Chewy.
Will Oliver is going to be, you know, I don't know.
He'd be like the mascot. He'd be like preaching. Win-wins.
Yeah, that's it. I've got there's a mascot under the desk, right, of a hamster. No, but seriously, I mean, I think it's like there's certain, because I think the joke speaks to something that I think is actually pretty important to us, which is just like, let's start with like, don't really know. Right. And start with, we actually don't really know. We have a set of principles which I can articulate and Will can articulate, and I would be glad to do so now. And then there's a function of iterating on those principles. And iterating in a way that's hopefully reasonably authentic. Otherwise we'll get bored, and I'm not sure anyone will be having much fun. And so, in terms of the principles, it's really around this journey of investigating quality, this journey, this, and it's also another cliche thing. It's really hard. I struggle myself to say, but this question of the pursuit of truth, is how do you actually build a system to pursue truth? So that has components. And one thing that's reasonably likely is that the experience involves a community of operators, a community of investors. You look at the stakeholders in this system, right? You have those operating, those providing the capital to those who are operating. You have educational institutions that are training people to move into both sides of that equation.
Mm-hmm.
If we get this right, I think this will be a trusted space to bring people together, to learn in ways that are better, faster, cheaper. That's a big. It's enhancing that flow, right? So that and I think then you can layer on sort of conceptually. Well, what sort of business, what sort of models, maybe are we attracted to? Can we make sure that we're giving a ton more value than we charge for? And there's that whole tactical dimension. But really, maybe what's most interesting is this quest for community, this quest for better conversations, better dialogue, and creating a trusted space where people can actually exchange ideas. Because I don't think it'd be such a bad thing if everyone, for $20-30 a month could learn about how the best businesses in the world operate.
No, that feels like an incredible education, even if you're not placing bets on those companies. But if we can even come close to answering that, certainly it'll be fun and lucrative and educational. And of course, the real returns are the friends we made along the way, which is fun to bring people along, like one-to-one and one-to-many. And, I've been very grateful to get to know you and both Wills in this process, and Blas, and this whole community of people who are kind of attracted to questions like this and hang out in the places like Lattice Work and everything else that we do. What
amen to that.
Yeah. Well, I want to hear and maybe the last thing, we're well over here, as I knew we would be, because every time we've ever talked, we've exceeded the length of time that we said that we would talk, because that's how we roll. What are those principles that you mentioned that are guiding In Practice? I think this is something I appreciate about you, is how thoughtful you are about the long-term orientation, the win-win orientation, the consideration of all stakeholders and community, the pursuit of truth, not just in name, but in structure, and understanding that you have to kind of create the environment that educes, to use your word, and allows for the true, uninhibited pursuit of truth. So, talk me through some of the principles of In Practice, and then let us know where people can get involved in this community that pursues truth, and what kind of help we can provide.
I would articulate it as follows. There's this North Star of quality. Mm-hmm. That as we explored earlier is pretty hard to get your hands on, but there's something about being committed to what are the most beautiful questions we could ask around quality, and what does that mean for each of the stakeholders we're involved in, right? And that gets you pretty quickly to win-win, right? And so there's quality win-win. There's a real effort to focus on inputs over outputs, and that is so hard. But when you start thinking about quality seriously, then it becomes a lot easier. And I think as we've gone on this journey, it's just our ability to focus on inputs over outputs and be careful about what we measure. We've grown a lot in that sense, and a lot of that's due to actually cultivating a shareholder base that can work with that, right? That's aligned. And I would say, I don't know if I would complicate it much more than that. I think if we get those things right around, quality and win-win dynamics, in service of, relationship between quality and truth, those are joined at the hip. And then, some degree of service, right? is I think, I mean, this came up a number of times, right? We're eating our own cooking, and are excited to always find ourselves at the heart of the operation in terms of consumers of what we're trying to build.
Yeah.
But my God, there are, there's so many things we have no clue about. And that's where the community aspect is deeply exciting, because I think there's something about, I mean, D Hawk talks about community. He says, he has this line around community's it's not what a community can do for you. It's what you can do for a community. That's the basis of community. Communities that work are fueled by people that are more interested in giving than taking. And this is where, I guess we've circled back to Munger, and you can get all metaphysical about quality, but actually the insights that he and the guys at Berkshire had are just pretty insane on that level. And that's, what's he done? Well, he's gone bottom up through biology and looked at systems and the whole Santa Fe angle, systems theory, and what lasts ultimately.
Yeah. I mean, the idea of exploiting the under-recognized simplicities, that what looks like genius is usually something simple taken very seriously over a long period of time.
Right.
Yeah.
Right. And I do, because I don't think, to that point, I don't think anything we're doing is really unique in it's combining probably a few half decent ideas. And
well, I think that's what I love about learning about In Practice and becoming friends with you at this stage. I think is, we look back and idolize some of these companies like, Costco or Nucor Steel or, Glen Eyre, and you look at a 40-year track record of compounding at 20%, and you're like, wow, that's incredible. And it only becomes incredible when you see it over 30 or 40 years. And I think what's interesting now at our stage of life is kind of like looking around at the people who you think are actually in the first 10% of that journey, who have that perspective and who you can imagine now going decades continuing to sort of practice those disciplined, simple, long-term compounding things. And I think In Practice is an amazing example of that. And you and Will, as a result, like your role in that, I can totally imagine, sitting at Lake Como with you in 40 years and looking back and being like, hey, it worked. Under-recognized simplicities over a long period of time. And I hope that's how this feels the whole time.
Yeah, I think it's very generous of you, and it certainly from the inside doesn't feel like we've figured much out at all. But I mean, I don't think we have anything better to do than give it a good shot.
Yeah, love it, and
right?
You're living the truths that you're learning. So, thank you guys both so much for taking all this time and then some extra time and teaching us everything that you can about what you've learned and how you've learned it. And I think. I certainly learned some things about conversation and research and truth. And I'm excited to, keep learning from In Practice and keep learning from you and be part of this community. That's I've got to go finish my homework that you gave me on assessing quality, and hopefully we can keep chipping away at this all important question.
I look forward to chatting about that. We're going to be running a series of dialogues on that with some wonderful human beings over the next few months, specifically on the topic of quality in a local business context, which is part of the In Practice offering. And then I think another project is getting a bunch of people together to have some conversations, to get deeper on this topics that I think we opened up today, because that's absolutely fascinating. And it is such a slippery topic, and making that, McGilchrist talks about making a right, left, right transition. That's the basic model. If you distill the core of his work, it's taking, you can almost look at it as a stage of, maybe to end on this note. And I really owe a lot to Tom Morgan, actually, for drawing attention to this. He's written some beautiful, a number of beautiful articles on McGilchrist, talks about it so eloquently, and it's really helped me articulate the reading, which is the idea is to reach the simplicity on the other side of complexity, right? Is to have the open awareness, the creativity of a child, But after going through midlife and this sort of, the crisis reality sort of, punching you in the face, the complexity of the world, the brutality of the world, and to come out on the other end with an integrated worldview that harnesses that sort of the playfulness and the genius, the creative genius and openness of a child to its environment, whilst also being able or having deconstructed the system and having a sense for the more practical dynamics. So that's the right hemisphere, the open awareness, takes in a situation, the left hemisphere deconstructs it, right? Which is where your work comes in on leverage, and I know a lot of what you've published has been super helpful to us on that level, right? Which is essential to then moving to an integrated perspective, or it's a gateway into a return to the right, where you take what the left surface is, reintegrate it, and then hopefully you have a deeply embedded sense of participation in the world, a sense of a practical way to relate to it. So you're combining. It's really another way to put it is combining a sort of the science and the sacred.
Yeah, I love it.
And not either or, but both.
Yeah. Neither is sufficient by itself for I think a full life. So, well, tell us where we can go find you, find your work, follow up, and participate in some of this. So certainly In Practice. Are you both on Twitter?
I would say for our American listeners, In Practice is with an S.
Oh yeah. Yes.
It is. There's a story I'll share maybe some other time around why that is. We suffer its consequences, but inpractice.com with an S, Twitter _ or @ In Practice,
okay.
With an S. Those would be the two places.
Awesome. All right. Thanks so much, Will and Will. I'm excited to talk to you guys shortly and to see kind of how the community forges around this. And I hope we took another step with it today.